Welcome to Momentum Monday. Today is September 3rd, 2023. Howard, how are you spending Labor Day weekend?
I am in Muskoka for a few days before I head on my global cycling adventures. But I'm in my buddy Rob's cottage. This is their band room.
Wow,
It's nice if you have your own little
great.
studio to record music. And just catching up on markets. Markets are closed tomorrow, so catch us up on how we ended up last week.
Yeah, so last week we had follow through day on all the indices. Now all the major indices are back below, above their 20 and 50-day moving average. We're starting to see momentum stocks bouncing, breaking out, following through. Earnings gaps are following through. So for the most part, definitely market action has improved in the past couple of weeks. Obviously, it's still a market of stocks. Some sectors are doing a lot better than other sectors. And what I'm noticing is that the tech sector is finally back to being highly correlated with rates, meaning that when the rates go up, the tech sector is really pulling back, and when the rates pull back, the tech sector is rallying. And in the past couple of weeks, rates kind of pulled back, so the tech sector had the opportunity to bounce. And on Friday, we saw the opposite. Rates bounced, and then tech sector kind of faded. But as it faded, money rotated into energy and metal stocks. So I mean, the new month started with kind of inflationary thesis playing out. We'll see if this will continue next week. Obviously, one day doesn't make a trend, but that's what we saw on Friday. So overall, I would say market of stocks. Some are doing really well, just breaking out, building new bases, holding well. But others are kind of in bear market, like especially high yield stocks like consumer staples, utilities, some REITs. They've been devastated
Yeah.
uh, for most of this year. People are just not looking for yield anymore in stocks when you can get more than 5% in
Yeah, I mean,
short.
look at Verizon, and you're right, like the bellwether dividend stocks like a Verizon,
Yeah, it's not just Verizon. It's so many of them. Maybe at some point they offer really.
even Disney, like anything broken that like, so oh, we have a dividend, well, you can get free, you don't have to deal with stock losses and get
Yeah,
6%.
look at Walgreens. Walgreens is back to almost 2009.
No, but it's
So
over. I mean,
it's
it's a
pace.
reorg. They can't, they got to deal with theft. They have to deal with, just, just Amazon. And now they got caught like Mark Cuban's drug company. It's just over. They had a
Yeah.
great run. It's amazing. Those are amazing brands that have been undone. But you got to stick to like really focused growth ideas. I mean, the beverage companies continue to do the best, Monster and Celsius.
Uh, Monster
And
not so much, but it's just building up a huge base here. Like they need to
no, but
build
over time, like so, beverages industry still continues to do well.
over time. Yes.
Yeah.
Yeah.
And then Google Shopify. You flip through the charts quickly, but we've been talking about it for a while, at least on the Google side. On the Shopify, the Amazon Shopify partnership. I don't know, 2 years ago, would anybody have cared? But now that that Amazon and Shopify really are the two platform winners, the enemy, my enemy is my friend. The fact that they teamed up this time so that Shopify merchants can use Amazon Plus or Shopify customers of Shopify type products can click out with Amazon Plus for delivery is pretty amazing. Especially for Shopify, I think, who for a couple of years, 3, 4 years, was spent trying to get to a market cap that could compete with Amazon. So when Shopify hit a market cap, let's go back to Shopify and see how, what they were up against. They at one point when the stock was near 200 was let's call it a 3 ton, it was a $250 billion company. And I remember selling some at 100 billion. Now flash forward 3 years later, and they are a 85 billion dollar company. And here's why I'm super bullish on Shopify is they can continue to uh, use this market to clean up any overhires. They are the no one can compete, right? Like there was 1,000, but with ZERP ending, Shopify's damn good enough. The bear market helped them refocus their strategy. And basically, you're buying a company that's like 4 year ago market cap, and now they're partners with Amazon, the behemoth for shipping and logistics for all the small vendors. So, and rates are extreme. And the one biggest secular trend of the internet is e-commerce. So, I think it's going to become a bellwether. You still got the founding CEO. I
Mhm.
think they got a serious wake-up call from the 70% kind of crash. And Mercado Libre too, same story, but much more vertically integrated Mercado Libre, and probably also
Yeah.
uh, I wouldn't take it over eBay, but Mercado Libre has to be on that list of e-commerce juggernauts. So, and then you have Google, Ivan, with the relative strength. Um, it's performed better than Microsoft since um, since the announcement of ChatGPT, which we keep going over. And then the energy stuff. Like I was talking, I'm in Toronto, I'm in Canada, so I'm talking to a lot of energy people. Just people know energy and mining here. And with $85 oil, I think because of ESG and because of the bear market in the energy guys have constantly go through, I don't think the supply, I think even if demand comes in here, and it is, the supply is going to be a constant problem. So I think this bull market in energy probably will surprise people to the upside. I don't know what that means regarding inflation because I don't think it's a demand driven thing as much as a supply driven thing from the analysts that I'm talking to here. But anyways, I'm long XLE, maybe just form fitting what I hear to my idea. But price wise, the energy sector looks good. And then metals, Ivan, you touched metals. I mean, with rates going from 0 to 7, two things you could say is like metals are dead, but why aren't they dead? Like, if they, this should have been the worst year and a half for precious metals on record, with rates going from 0 to 7%, killing inflation. But most, especially gold, kind of hung in there near all-time highs. So, and theoretically kind of rose through the inflationary period. But now the rates, if rates have to come back in again over the next 2 years, this next breakout in gold is going to be massive. So, it's on my list here to watch because this should for gold. So the relative strength, the fact that it held up through this rising interest rate period, we know what happens on the other side of this rising interest rate period. So gold could be on this next breakup, could be for real if it happens. So that's kind of what I got. I don't really have any hot new ideas. Is
Yeah.
there anything that you're kind of swing trading, speculating around?
Yeah. Typically, when we see a rise in energy names, in metal names, this doesn't bode well for the rest of the market when those sectors do well. So we'll see if we see that rotation in the next month or so.
Okay.
Other than that, as I said, in the past couple of weeks, price action has improved substantially. So there are definitely interesting setups in various sectors. I would say, I mean, obviously, big tech is kind of depends on rates. If rates pull back, we might see, stocks like Meta and Microsoft just bouncing back. If the rates continue to go higher, they'll probably roll over. So these
Yeah.
are kind of, the big bellwethers that, you can play both sides just depending on the rates or depending on how they do versus their like Friday or Thursday highs and lows. You can just use those as as triggers or signals from a swing trading perspective. And the biotech sector is kind of waking up. There's some interesting names in this field. Obviously, they're
Rich Bio, what do they do? Again, with no, these things all have negative earnings, so it's so hard for me.
yeah, they all have negative
Mendelian
earnings.
disease.
They're very
Really nice
risky,
breakout. What's the weekly look like there?
and they can easily gap down or gap up. So definitely not. You should
It's
not
not.
be playing them with any types of size, and preferably probably with options, so you can better control your risk.
Yep.
Semiconductors are holding really well
Yep.
in general, trying to come back. Obviously, Nvidia is the big one.
Yep. Looks great.
If it breaks out above 500, we can see a further squeeze, but it's not just Nvidia. There are other ones that are acting well,
Yeah.
setting up. Lulu had a big, just jumping on like other sectors. Lulu had a big quarter in
Wow.
estimates.
I mean, if you had told me that, and obviously, I don't know, I guess, but
Breaking out.
I talk about this all the time. I mean, in Soho, like, and I'll be there this week. It's like, and I'll go check out, new stores and what's going on. But like, if you go into any corner now in a major city, Lulu's got a Bawari and an Aloe.
Yeah.
What I got wrong about this whole sector is just insatiable cultural switch of work from home, and I just couldn't. I'm really shocked that they've been able to execute at this size. I'm not really a Lulu buyer of clothes these days, but there's no doubt that this company has digested
Yeah.
just incredible. And Peloton helped by just imploding themselves, but so really hats off to them in an era where like retailers are just imploding left and right, from Walgreens to the Gap, and Lululemon's kind of they've kept their COVID gains. That's phenomenal.
Yeah. Some retailers are blowing out. Others are doing really well. Like all the
But other
discounts.
than Walmart, right, at some level, Lulu has been the bellwether of this, like, Ross stores. I've never been in one, so I can't comment.
Stores, TJX, Oli,
I mean, TJ Maxx to do this during like seeing what other retailers have gone through. I mean, it's $100 billion company. I've never been in one. Do you shop at TJ Maxx?
I don't shop there anymore, but I wish I owned their stock. They've done
Oh my
amazing.
goodness.
Yeah.
Oh my goodness. Congrats to that company. I don't know what's the differentiator of their products, Ross Store and TJ Maxx. But anyways, that's
I think they buy in bulk,
broken.
like
Yeah.
older stuff from brands that they couldn't sell, and
Big
they
country.
sell
It's a
them.
big country.
Yeah.
And so TJ Maxx and Ross Store is $150 billion between the two of them. Jesus, the country is still built on
It's a
retail.
big business, yeah, and Oli is a similar business model, trying to break out. And there's the Chinese one, MNSO, also
That.
acting well, trying to break out. In general, as you know, China is trying to kickstart their economy, their stock market. They're injecting a lot of liquidity, and it hasn't been working well for too long this year. But like last year, we saw so many Chinese stocks kind of bouncing. We'll see if it holds. And
Luckin Coffee's been the winner. They're the
traded
Starbucks of
Google,
China's.
which is a brokerage. Had a
Yeah.
very big weekly move, and
Yeah, that's a nice move.
there are quite a few of them there that are acting constructively. Obviously, the big one, the ETF KWAP, is in the middle of nowhere, just going sideways. But you have names like, what was the Chinese?
No, The Economist was out ripping on China. So again, I'm never going to get sucked back in a world where I'm investing in Chinese companies.
Chinese trade is not an investment. You have to just
Right.
trade it. Don't
Gotta
invest in it long term.
but as if you treat it like options and treat it like a speculative part of your portfolio, some of these charts
Yeah.
like C-Trip. That thing's been going sideways for 10 years. Is that CTRP? God, I used to own that. They
Yeah,
just,
the Chinese price booking.
hey, look at that monthly chart. Like that thing,
Yeah, this is the monthly
very
chart. But the Indian
That's an Indian one. I thought
Indian
C-Trip.
is doing even better. They broke out on earnings. They're up like 30% in the past.
Oh my goodness, I own
uh,
that forever. MMYT, go look at the monthly.
It's all-time highs or it's almost all-time highs. But yeah, this
Yeah,
is
that one's gonna go back on my list. Hang on. I gotta put that on my list.
MMYT. Earnings are improving. They're starting to make money. I mean,
Yeah, I think that one is very
it's not
interesting.
cheap,
Only 1,000 followers, and it's
but they're
breaking.
growing. They're
Yeah.
growing. They broke out on earnings a few weeks ago. Right here, look at this
Oh, yeah.
big volume breakout, and it just immediately
Yeah.
followed through, which means that look at the blue bars on volume. Institutions have been accumulating it. It's only a $4 billion company in India compared to the Chinese trip is a 26
Yeah.
billion, and then the US, I mean not just US, the world booking is 110 billion, and then you have Expedia, which is another 16.
What's make my trip? Yeah, I think you just
MMYT.
have to own this as a proxy on Indian travel.
I mean, it's
That's what
basically the
I owned it
only
for 3 years ago, and it was just when the recession hit and I got stopped out. But
the only Indian stock that is kind of high growth and doing really well. Just like a few years ago, the only European stock that you could own was Ferrari Race. Now kind of MMYT is the only Indian. Speaking
well,
of,
Norvo Nordisk surpassed
oh yeah,
LVMH.
yeah,
They're now the biggest company in France or Europe.
it's
And
Danish company.
okay, so they're the biggest company in Europe. They just passed LVMH's market cap.
Yeah, wow. I mean, look at this long-term chart, Howard. Since 2003, they're up, I don't know,
100,
60,
100 times.
70 times. Crazy. And just speaking of Europe, I mean,
By the way, not stopping. Like Ozempic works. Like again, I don't know the long-term side effects. I have family members that are using it, and they look. I mean, they're thin.
that's
You like?
so it's working. So it's really
Oh
working.
my goodness! Look at the above the 200 day.
Yeah, crazy.
But Google, Nvidia, and look at Eli Lilly.
Yeah,
Unbelievable.
boring medical company. And
Pharmaceutical company.
what was interesting on Friday that we saw strength in metals and oil and energy in general, coal, but the US dollar also went up. That's very interesting because they tend to go in opposite directions. And that kind of coincided with weakness in Europe. Like for whatever reason, Europe is starting to show relative weakness, starting to pull back. I don't know if there's some worries about the war, about the winter and energy cost in Europe, but this is like the 50 biggest stocks in Europe is like the European S&P 50 that is started to show some signs of relative weakness in the past few months as the dollar has been gaining strength. So this is an interesting development for those that are interested in macro, obviously.
Yeah. Very
So
interesting.
that's it.
There's a lot of stuff, and then Airbnb got added to the.
Oh yeah, Airbnb were added, so I'm actually long this
Oh, you
one.
got lucky there.
I
Okay,
was
nice.
lucky. So gapping up near around
But
40.
it's a reminder why the S&P works, right? Like so when the market's going down, they kick out. This is why S&P earnings numbers always get revised up because they kick out
Which
shit.
ones were removed? Because they
Two
tend to have
shitty companies that were going in the
the
opposite
worst timing,
direction.
Howard. If you look
But
at, like, they often have the worst timing, but
it's not about but they're not a timing mechanism. They're
I
just
know.
dropping on certain dates. But what's amazing about how rigged the S&P index is and why it just actually works until it doesn't, I don't know the scenario where it doesn't, is
Because
well,
they
the earnings are continually going up because they drop companies that have low earnings and they add companies that are growing. And it's like the beautiful momentum ETF. And, it's a very diversified market cap weighted momentum ETF, but that is indeed one of the very simplest, broadest ways to just invest in momentum is just to own the S&P index.
I think the simple reason why it works is because they just keep the winners. Like
they keep their winners. What I'm saying is, and it's so in an American market, you know, when you really think about the American market, the whole scam, and it's not a scam, the whole positive expectancy is everything in the end is tied to earnings. And if you're the one metric that your ETF is earnings, you know, you buy the dips. So it's just hard to beat the indexes like the QQQ and the because they are replacing poorly run businesses, not as fast as you would want to replace them with. And but anyway, there's a lot of good, interesting cross currents. And of course, we have, like we've been talking, I'll let everybody go, but you got student loans paybacks, I think, start like now. So you should start seeing a lot of press about it in the next 2 weeks as people complain. Okay, Ivan, have a great week. I'm headed to Europe, but we will do a show
All
next
right,
week.
Howard, enjoy your cycling trip.
We'll be in Spain, but talk to everybody next week.
All right, bye.
Cheers.